So people have been asking me, hey Aaron, I see people advertising these 2% interest rates again. I didn't realize mortgage rates are back into the 2s.
My God, okay, it's happening. Everybody stay calm.
What's the procedure, everyone? What's the procedure?
Stay calm.
Wait.
Everybody calm down. No.
Tell me, how can I get a 2-something% interest rate? Now, before I answer that question, do me a huge favor, hit the like button and make sure you're a subscriber to the channel so you get more videos like this. All right, so how are companies offering 2-something% interest rates when, I mean, in reality, rates are significantly higher than that. They're double that. So how is that possible? Isn't that like false advertising? Isn't that illegal? If it wasn't available and they couldn't actually provide the product that they're quote unquote offering, then yeah, that's totally illegal and they'll get fined into oblivion hopefully. But there is some truth behind it. And so the way that this works essentially is that people are advertising what is called a temporary rate buy down. We've done videos about it. Haven't been all that popular, but I mean, these things ebb and flow based off of consumer needs. And so, with interest rates being higher, consumers are looking for ways to get a lower mortgage payment. And so when you're buying a house, there's something that's called a temporary buy down, where essentially the seller is paying in a form of a concession, paying some of your mortgage payment for the first couple of years. In this case, what these people are advertising is called a 3-2-1 buy down. All that simply means is that for the first year, the rate is 3% lower than what it actually is. And on the second year, it's 2% lower. And on the third year, it's 1% lower. And then on year 4, it's back to whatever it was at the beginning. Hence the 3-2-1 buy down. Now, I think a lot of people who are leveraging this are obviously they want the lower monthly cost to start off with, but they're also hoping that an opportunity for them to refinance permanently into a lower rate will happen sometime in the not too distant future while they're still in this temporary rate buy down zone, and then they don't have payment shock. Obviously, nobody has a crystal ball and knows what will happen in the future. So let's go over an example of a 3-2-1 buy down and take a look at how you could potentially use one yourself to ease the cost of high mortgage rates. So let's say that you were buying a house and you were borrowing the conforming loan limit, $726,000. I know some of y'all watching this, you'll probably be borrowing less, and maybe some of you are borrowing more. Just know that the 3-2-1 or the 2-1 or the 1-0 or whatever temporary buy down option that we're talking about, you can get this on lower loan amounts or higher loan amounts. But for this example, I'm going to use 726. And let's say that your starting interest rate was 5.99%. Now, I'm not saying that's the rate that you qualify for. I'm just giving you guys an example, okay? Everybody's rate's going to depend on their credit, their loan type, all of that different stuff. But let's talk about what it mathematically looks like if you had a $726,000 loan amount at 5.99%. That would mean that your first year, the interest rate would be 2.99%. Boom, there we go. We've got 2% interest rates, and that's how people are advertising this. Now, in this example, if you had a 2.99 for the first year instead of a 5.99 and you borrowed $726,000, that's going to save you almost $1,300 a month, like $1,291 and change. So, I mean, you're talking about a whole lot of money year 1. Year 2, when it bumps up, because now instead of $299, I'm going to have a $399. Year 2, now I'm saving $886 and change. Still a big chunk of money. And then year 3, my $399 becomes a $499, and my monthly savings are $455. Now, by this point, I'm hoping that rates are low enough to where I can permanently refinance into a lower borrowing cost before I end up with my $599 in year 4. So besides from having a lower monthly payment, the benefit of this is that the seller pays for it. It's not like you write a check for this upfront. That wouldn't make any sense. You would just hold on to your money and just make the payment like you would have beforehand. But this is a seller paid concession, and so this comes out of the seller's net proceeds when they sell the house to you. And so this is also a negotiating tool. This is something that, depending on the price that you offer on the house, if you're going to ask for a temporary buy down, you might want to think about, at the end of the day, the seller's going to want to walk away with X amount of dollars. And if you really want the house and you want to have your cake and eat it too and get a temporary buy down, you might have to bake some of that into the purchase price. So keep that in mind as well. If you want to get a custom temporary rate buy down quote, no credit check, no personal information needed, go to the link below, 321ratebuydown.com, and basically you'll just answer a couple of simple questions about the purchase price essentially so that we understand what numbers to put together for you, but we'll give you an actual example of what a temporary buy down might look like for you. And hey, if you want to just jump into the pre-approval process, you can go to this link. We'd love to get you pre-approved and out there shopping for success. If you got questions about a temporary buy down, put them in the comments below. Who knows, maybe I'll make a video about it. We'll see you on the next one.